Hey everybody, Chuck Barone. Monday, March the 27th, 2023. A new week of crazy and we're off and running. Actually today, not a really crazy day for a change. It was nice and just kind of a normal day in the markets. Not a lot of drama, which is a good thing. We'll take that every once in a while. But before we start the show, as always, I want to welcome everybody to the show. Thank you guys for your support. You guys keep us going every day. We appreciate it. Markets today. Well, the stock market just had kind of a mixed day. It was not a great, I'm looking at the chart here, it was just kind of a bad day. But market ending up mixed with the Dow gaining 194 points. S&P up 6, but the NASDAQ down 55. So some of the flyers last week, people taking profits this week. Markets not really much to trade on today. We've got some data coming later this week. I'm sure that'll move these markets depending on how it turns out. But today, kind of a nice quiet day. Bonds, though, a little bit different with the bond market. People selling bonds off today. 10-year up 15 basis points, 3.53 on the 10-year. The 2-year up 23 basis points. Now remember, when the yields are going up, that means the price is going down. So people are selling bonds, driving the yields up. When you're seeing 15 basis point moves, 23 basis point moves, guys, this is not usual bond market behavior. It's just, it's cuckoo crazy stuff now. The market, just not even sure where rates need to be settling. The Fed needs to be a little more firm, make the market understand with this banking situation now in the face of the inflation, adding another little bit of uncertainty into these markets, driving the bond market bananas, guys, just crazy. The dollar today, down very small, 102.83 on the index, down fractionally. Not a lot of news on the dollar, kind of just lingering there. It looks like it's starting to drift to the downside now. It had a little spike back up 104 and now coming back down. Looks like the dollar just kind of there right now. Not a lot of news for the dollar to move up or down on either. Metals today, not a great day for metals, with gold down $21.60, hitting some resistance now at that 2,000 number. $1,956.60 per ounce. It's been trying to battle its way above 2,000. Been hitting some resistance there. Actually was trading above 2,000 a couple of days last week, just kind of hanging there, but not finishing above 2,000. Looks like it's still got another charge to go before it breaks through and stays above. Silver today down 15 cents, down marginally, $23.06 per ounce for silver. I still really believe you're going to see 2,000 gold, $25 silver, like it's imminent, going to happen. Oil today up $3.66 per barrel. West Texas Intermediate, $72.92. Basically breaking out of that lower trough it's been in. So, oil's just been kind of not really doing much. It has a trading range. It's just been kind of jostling around, mainly between about $70 and $75 per barrel. It spiked up, was about $75.80 per barrel for a while. Then it was down below 70, it was 65 to 70 per barrel. Now kind of getting back in its comfort zone between $70 and $75. Not a lot happening in oil either, although there is some rumors about this, the death of the petro-dollar, we'll see. But nonetheless, oil up today. Bitcoin down $725 today, $27,024. Still a pretty strong price for Bitcoin. I've been reading a lot of positive stuff about it lately, which probably is not a good sign for Bitcoin. You know how it is. When everybody loves it, that probably means it's time to sell. When everybody hates it, that means it's probably time to buy. And we've seen a lot of both of those with Bitcoin. But anyway, today, just another day in the market for Bitcoin. News this week, guys, the stuff we're going to be hearing about. Today, just an earnings day, kind of a quiet day. Tomorrow, we won't get much, but we will get consumer confidence, which is expected to be down. Depending on the number, that's something that could move the markets. On Wednesday, we're not going to get much data. We'll get mortgage banker index, expected to be higher. I don't know why, but apparently, I guess when you coming back from the dead, just lifting a finger is a big thing. So yay for the mortgage bankers, expected to be up. Thursday will be an interesting day. We'll get fourth quarter GDP, which is expected to be positive plus 2.7% for the fourth quarter. On Thursday, we'll also get jobless claims. This has been the proverbial pain or stone in the shoe of the Fed here, with jobless claims staying really, really low this week. Another week to see. I haven't read the estimates yet, but they've been continually lowering their estimates. We'll see if they can get it low enough this time to actually be lower than what the numbers come in at. And on Friday is really the day. I guess we'll get some stuff that's market moving stuff. I think we'll get personal spending and personal income for consumers, both of those important numbers, especially for inflation. We'll get the Chicago PMI, the Purchasing Managers Index, which will give us an idea of how things are working for manufacturing and business as far as their purchasing. And we'll also get the University of Michigan Consumer Index, giving us an idea of how consumers are doing with spending and saving and, that kind of stuff. So Friday will be the day. Not a lot of earth-moving data this week. Hopefully we won't get a lot of interesting stuff on the outside of the markets, bank troubles or more craziness from the Fed or some geopolitical crap. But it looks like it's setting up to be a reasonably quiet week. We'll see if we get that. News you guys need today, well, not a lot in the markets, just a couple of quick things to go over with you guys. Looks like this banking stuff, they're talking it up like everything's solved and wonderful because a couple of vultures came in and bought up what's left of the carcass of Silicon Valley Bank. I think this is just the beginning of what we're going to see here. One of two things will happen. Either the government, which is now considering, more regulation for smaller banks, possibly reinstating them back into Dodd-Frank, which they were exempted from. What they did was they took the law, changed it, and exempted everybody under $250 billion in assets. Well, the biggest of those was Silicon Valley Bank, and kaboom, down they go. Signature Bank, also a big one, even though it was only in the face of what banks look like in the U.S. was small, it was still a pretty big regional bank. So now our dumbasses up in Washington considering putting them back in. We'll see what they do. But if they do not take action to re-regulate the regionals, you'll just see more of this stuff happening with regional banks blowing up, big banks coming in to save the day, scooping up the important assets, leaving the carcasses to be bought up by smaller other regionals that want to expand into those areas. It's all just a big hustle now. These guys have learned to turn bad news into good news for their businesses, and that's probably what we're going to see continue in this banking stuff here. Also today, I was reading now everybody's speculating on will the recession come, when will it come, how severe will it be. You've heard a lot of opinion on this, even for more than a year now. Started last year. Everybody was convinced, myself among them, that we were looking at a recession last year. It didn't really come to pass. I've been telling you guys, and I'm still saying it's the same, the Fed is going to engineer a recession one way or the other. We all know, and we've been stressing it on the show for a long time, higher interest rates don't bring down inflation. They don't. Okay? Higher interest rates dampen demand because people don't want to borrow at higher rates to buy as much stuff, typically leading to a recession, which then that lack of demand brings down prices, lowers inflation. So we've known all along that the Fed wants to raise rates as high as they have to engineer a recession. We know that's what they want. That's why they talk about soft landings and hard landings. And, if the Fed's going to raise rates till something breaks or whatever the cliche is, it's all because we all know this recession is coming. The only question is, when will it happen? What will be the catalyst, the straw that breaks the proverbial camel's back that signals the recession is full-blown and on? Might not be 2 consecutive quarters of negative GDP. We saw that last year. Guess what? No recession following. Or at least in everything other than real estate, right? So we'll see where this goes. We're going to keep an eye on this for you guys, of course, and keep you up to date on all of it. Interesting article today. Read if you want to check it out. Forbes magazine. Great article today on the death of the petro-dollar and the birth of the petro-yuan. Kind of predicting that, our oil-producing companies, Russia, Saudis, Iran, trying to, teach the teacher a lesson, trying to get rid of the petrodollar, basically having oil priced in dollars. They want to try to settle. Now they're going to try to create the petro-yuan, apparently. I don't know, guys. I got to say, I got my doubts about that actually working out very well. What do you guys think? I mean, if you're Saudi or Iran or Russia even, big oil producing country, how many yuan do you want to have in reserve? Do you really feel like Chinese currency is as good as U.S. currency? Why? Is there enough of it in circulation to satisfy all the demands that we've made of it? Can you trust the Chinese government not to meddle in their currencies, bring them the values up or down, depending on how it suits them best? I mean, I guess the United States is kind of guilty of all of those things too, but probably not as blatantly as an authoritarian government would be. I got to say, I got my doubts about that. Hit me up in comments. Let me know what you think. You think really that countries want to trust Chinese currency, really? Russian currency? Would you? How would you like to trade all your dollars for Chinese yuan? Would you do that? I got to say, I got my doubts. And finally, last but not least, just to wrap things up today, I'm going to put something up today on the website. This will be a surprise for my assistant, Jake. I'm going to take just on paper, $10,000, and I'm going to invest it in the S&P, the Fidelity Investments S&P 500 index fund. Okay? I'm going to show you how I would play this market right now. There's not going to be a lot of activity. It takes me about it's going to be monthly toward the beginning of the month when anything that's going to happen will happen. But I'll show you how I would be trading this market right now, what I'd be doing if I had money to invest and put into this market right now. We're going to start it off on that index fund. That's all it's going to be. Just a straight 10,000, 5,000 in the fund, 5,000 in a money market, just to make everything reasonable. The money market's going to be priced in at 3% yield, okay? So it's not going to be like I'm claiming 5% in a money market. It gives me an advantage over what real money markets are paying, I guess. Nope, 3% money market, half in Fidelity S&P 500 index, half in the money market to start. I will put that up on the website, and then anytime I make any change to that portfolio, adding or subtracting from the fund, we'll show that I'll mention it on the show. We'll show it on the website as well. Anyway, guys, that's it. Tomorrow we'll be back. We'll have some data. We'll have who knows what the hell else is going to be going on in this crazy world. But we're going to give it to you straight. We're going to give it to you in language and ideas that you can understand and relate to. Not a lot of razzle-dazzle here, guys. And sorry, not much as far as entertaining goes either. I'm not Greg. I don't make the faces or create the funny nicknames, although I do laugh watching his videos, seeing them. But you're going to get what you need here, and we appreciate your support. We'll be back again tomorrow. Till then, guys, take care. Thanks.